Before we get into it, Synth is building what traditional finance never dared to make public. A permissionless quant intelligence layer where anyone in the world can access hedge fund grade trading signals without needing insider access, capital backing, or a Wall Street resume. Instead of locking quant strategies behind proprietary trading firms or internal research desks, Synth opens a playing field, allowing over 200 data scientists to compete daily, submitting their models against live market data for ranking, rewards, and visibility. Since February, the network has already paid out more than $2 million in incentives, rewarding not just lucky guesses, but consistent probabilistic distribution forecasting across 4 key assets. Unlike binary prediction systems that reduce everything to yes-no outcomes, Synth requires participants to submit full probability curves, meaning they must forecast the entire expected distribution of price movement, not just direction. This approach mirrors how top quant firms actually model uncertainty, not by declaring up or down, but by expressing confidence levels, fat tails, variance intervals, and implied volatility shifts. This makes Synth's signal layer far more information dense, turning every data submission into something institutions can plug directly into risk engines, execution bots, option pricing models, volatility harvesting strategies, delta neutral order bridge systems, and even automated treasury allocation logic. The power of this approach isn't hypothetical. To prove the utility of the signal layer, Synth ran a test case using Polymarket, building a strategy powered solely by the protocol's aggregated intelligence. No insider data, no privileged execution layer, just raw signals from the network. The result was a 110% return, demonstrating that decentralized forecasting data, when aggregated properly, can beat traditional trading benchmarks and even outperform structured quant desks that rely on closed data pipelines. And the opportunity doesn't stop with 4 assets. Synth is already expanding support to integrate the top 75 traded crypto tokens, bridging multi-asset signal coverage that can be applied across perp markets, cross-exchange arbitrage, volatility plays, macro swing positioning, and liquidity routing systems. With this expansion, the total addressable market jumped significantly, spanning not just retail traders, but market makers, on-chain hedge funds, execution layer protocols, and anonymous AI trading agents looking for structured signal input. In fact, one of Synth's most powerful upcoming features is AI agent support, allowing agents to plug directly into Synth's data streams, interpret probabilistic outcomes, and execute trades or hedging logical automatically. Think of it as an on-chain Bloomberg for AI traders, where models compete, data is ranked, and execution engines can be subscribed to the highest performing signals in real time. What makes all of this transformative is the accessibility. In traditional quant finance, even getting access to signal data requires background checks, NDAs, capital lockups, or institutional sponsorships. With Synth, none of that applies. You can be a solo quant worker from a laptop in any part of the world, no capital required, and still compete directly with PhDs from established firms. And if your model performs, you get paid instantly, visible on-chain with no permission from a fund manager or a recruitment gatekeeper. Conversely, if you're a builder or trader, you can skip the competitive modeling phase altogether and simply subscribe to the signal stream, routing into dashboards, execution engines, or treasury strategies. In a two-sided marketplace for intelligence, quants generate the alpha layer and AI agents trading firms and DeFi protocols consume it. This turns Synth into a global liquidity layer for predictive intelligence, a missing piece in the crypto's trading stack where Tau and decentralized compute meet financial signal routing. To explore the live metrics, developer docs, signal feeds, or to compete as a data scientist yourself, you can check out the link in the description.
Bitcoin has been around for 16 years at this point. So, this either works or it doesn't. If it does work, then yeah, we got plenty of things that are around in 10 years.
You seem to be a proponent of smaller expert models instead of one giant multi-trillion parameter model. Is that, you think we're trending towards that reality?
I think we are. I think, and actually we've seen that pattern many, many times in compute history before. I mean, we used to have mainframes, right? The guy who ran Digital Equipment Corporation, Ken Olsen, at one point said there's a world market for 5 computers, and that's it. And by that he meant giant monster honking, mainframe computers. And then along came the PC, and the PC was regarded as a dopey toy. And lo and behold, here in the future, we live in a universe of a bunch of PCs connected through the internet, largely, right? There's a bunch of little, kind of beefed up PCs that are servers but even those are basically PCs, right? So the small drone won. The other time, we've seen it again with the online services versus the internet. We had these cathedral online services like AOL, like CompuServe, like Prodigy, and you logged into this one place, and for a while it looked like AOL like was going to run the world, right? Then along came the internet. The internet was open, decentralized. Anyone could put up a website. Nobody controlled it. There was no one entity that controlled it. Other than like ICANN, you had to go through somebody to get your domain, but that was kind of it. And they were more or less neutral. So it was like going to Switzerland. It was fine. Everyone was okay with it. They weren't a gatekeeper. They wouldn't refuse you. So anything goes. You could put up any sort of website. So that was and that one. That vision, which again was a decentralized, lots of little vision, won against the cathedrals of AOL and CompuServe and Prodigy because of their decentralized nature. So, again, we've seen this pattern. This fractal repeats again and again and again throughout history. So I see no reason why it won't repeat here.
And do you think the decentralized wins because it's just smaller groups and they're able to adapt quicker?
Yeah, they're like little speedboats versus the big giant. I mean, the big giant cathedrals, and also the big giant cathedrals have big giant bills, right? So, I mean, OpenAI is famously just incinerating cash at like this galactic pace, right? They're not making any money. It's the opposite. They're just burning money, and it's true that they're the ones that sort of kicked off this whole revolution with ChatGPT. But it looks like they're gonna, they're like a black hole that's eating itself. And I don't see how they get out of that, because I don't know how they monetize it in a world where I think AI becomes free, right? Like it goes to free, and it's like Linux, right? So there was once upon a time you could sell operating systems to enterprise and make a pile of cash. Then along came Linux, and now operating systems were free, and people bolted on all kinds of vertical modifications and support and other products around the freemium model, as it became known. Again, this is another fractal that has repeated itself, right? We don't have the behemoths controlling the operating systems. It's open and free, and anyone can contribute and build services on top of it. And so that's why I think this vision will win, because it is much more nimble. Because you can't, whoever you are, however big you are, you're not bigger than the entire world, and the entire world is your competition, right? You can't fight the whole world. So I think that's the world we're living in right now.